am so excited for this final panel discussion today. Thank you for returning from the coffee break. This is a really great primer as we lead into our discussions at dinner tonight. So this last panel, last but certainly not least, this discussion today, From Concept to Reality, Building Digital Assets at Speed, addresses the heart of this moment. Meeting people where they are at, often today that is unfortunately in times of crisis or limited access, and working to reestablish trust in institutional systems. As Josh mentioned in his opening remarks this morning, finding ways to work together to deliver that future safely and effectively should be our mission. And the executives that are going to join us on this stage for this discussion are doing exactly that. So ladies and gentlemen, your esteemed moderator, Michael Greenwald.
Jennifer, and thank you so much to Josh and the Atlantic Council Digital Dollar Project, Michael Greenwald, Global Lead for Digital Assets at AWS and Financial Innovation. It's such a pleasure to be here with really this rock star panel, and aren't these the best chairs you've ever seen at a conference? I must say, we're doing something very well here today. So I want to just introduce the panel. We have Richard Nash, Vice President, Head of Global Government Relations at PayPal, Jim Zemlin, Executive Director of the Linux Foundation, Denelle, Dixon, Executive Director and CEO, Stellar Development Foundation, and Harish Natarajan, Practice Manager, Financial Inclusion and Infrastructure, Competitiveness and Innovation. I think you won the best title. That covers everything we have for the panel. But I want to kick it off, and Denelle, I want to turn to you first regarding how will the evolution of payments come to include digital assets such as CBDCs, stablecoins, and decentralized finance. What does that coexisting space look like?
Yeah, I think it's great that it's, thank you for the question. Thank you all for being here. It's already happening. And what I think the larger part of your question is how will it get to the mainstream piece? We're already seeing companies and organizations like the UN leverage the digital asset space to be able to make payments and to make payments with aid into different countries. The only way that it really gets there, frankly, in my opinion, is if we see legislation around stablecoins and what stablecoins should be and creating standards around that so everybody's more comfortable. We saw PayPal recently get into the stablecoin spot. There are not a lot of other players want to, but they're fearful, particularly banks. Want to come into it, but they're fearful of what's happening in the United States. So really to make this work, we need to be able to have legislation around here that creates standards. We already see that happening in Europe, but we need to see it more globally. I think the US needs to take a lead in that. We're hoping. I don't know, some of you might have read the McHenry statements today that it could happen by the end of the year. That would be awesome if we could get that done, because I think that actually creates the foundation to be able to make it happen. The tech stack is there. People are leveraging it. We have 1 billion transactions on the Stellar network that happen every single month. And like 60% of those are payments and international payments. So it's happening already, but to happen at scale, we need to see that happen.
So speaking of scale, I mean, Richard, just speaking to you, same question. How do you see that coexisting framework really take place, take hold? And I mean, just given your vantage point at PayPal and seeing so many transactions take place a day, what do you see as that moving forward?
As coexistence of regulatory frameworks? Or?
Yeah.
Wow. I don't quite know where to start sometimes with that question. I think the, as Denelle was saying, I think there are lots of drivers as to what's going on in the system, right? Drivers from a regulatory standpoint, from providers driving, using digital assets for, we've seen wholesale CBDCs, we've seen back-end payment systems for banks, intrabank payments. We're seeing users demand and inquire more and more about how to use digital assets for payments is obviously where our expertise is. And obviously, we've seen digital currencies and other forms spring up and be absorbed into the system. Our goal is trying to figure out how we bring, as a payments company, all of these things together and make payments more efficient, cheaper, more effective, more accessible to people. And so we come at it from that perspective, which is sort of true to our track record with payments over the years. In terms of coexistence of how regulation then comes about, I think you sort of need to break that down a bit further, right? Because we've got regulation today that looks at different aspects of financial services. And even if I then take payments as a concept, obviously we're subject to payments regulation across the world, and it comes from different places. And then I think what you're going to see on top of that is sort of more attention to who gets to play in the different spaces, to Denelle's point. And then also a lot of this is going to be impacted by other drivers, right? Economic drivers, concerns about broader economic issues and how innovation needs to fit within that. Some of the risks that have materialized in certain spaces and reaction to that. And then who's seeking to play, I think, is another really interesting aspect that's going to drive a lot of that. But yes, we do see coexistence of the different assets. I think in terms of how from a regulatory standpoint things fit together, I think that's a huge question, and one that we could probably spend a lot more time digging into.
Yeah, Harish, I want to bring you in. I mean, regarding coexisting of those three buckets of digital assets or existing individually in a regulatory framework, just what have you seen coming from the World Bank and looking globally?
Thank you. No, I think if you look at payments innovation over the last several decades, I think there's been this quest to decouple payment services. First from the banking business, the e-money and other developments kind of achieved that. Then came the attempt to de-link the payment services from the provider of the account. That's where the open banking and tokenization, card tokenization comes in. And the third one, which is the quest which is underway now, which is about even removing the need for the account provider. Of course, this has to collide with customer expectations, behaviors, and so on, as well as the public policy objectives with which my colleague from the IMF alluded to during the previous panel. So I think how all these three kind of come together, how things balance out, I think is what will shape. One would expect a coexistence for sure. I think there is also this desire for speed. There's also this desire to look at financial services not as a distinct activity, but something which is embedded into economic activity. So that will call for different forms of money, different forms of assets, different ways in things are exchanged. So I think it is this intersection between customer needs, technological advances, and the public policy objectives. And it is, I think, incumbent on all the stakeholders to help and shape it responsibly.
So, Jim, I want to turn to you regarding open source infrastructure and building on the coexisting question we just discussed. What's the case for open source infrastructure? Maybe just leveling that for everyone here,
Sure.
And then let's build on it together.
Yeah, I mean, there's the obvious advantages to open source around transparency, trust. I would argue there's a security advantage to open source, the sort of idea that many eyes make all bugs shallow and reduce the amount of vulnerabilities in a public code base. And I think the last and most misunderstood part, particularly in this area, is just the efficiency of it. A long time ago, the tech sector kind of went all in on open source. In fact, you all use open source every single day. You probably don't even know it. 80 to 90% of the code in all technology products and services these days, anything modern, is open source. If you don't believe me, just who's got an iPhone here that can just play with me on this one? Take out your iPhone, go to Settings, and then go to General, little General section, scroll all the way down to Legal and Regulatory. And then at the very top there's a Legal Notices. Now these are the license notifications for all the open source software in an iPhone, which many people consider the most closed ecosystem around. And just start scrolling. I'm going to keep going here. It just keeps going and going and just keep going. Any of you out there, please join me in on this one.
I promise you, we didn't discuss the show and tell. It's all coming natural.
The point is that, the efficiency that comes from using reusable public building blocks that are transparent and trusted is something that is a part of tech. And what I witness in a lot of digital public infrastructure, unfortunately, is being behind what the tech industry already knew, which is that if we all collectively use a common upstream code base, we can all customize it at final 10% of the code to our local jurisdiction, to our local regulations. Now we have to, that's the code artifact. There's a standard setting. These are interoperability artifacts. The secure asset transfer protocol is an example of that the IETF's working on for digital asset. And then there's the policy framework on top of that. These are all compatible, but they're a nuanced conversation. I think that Dave said that. But just to give you the even most concrete example of why open source is so efficient, in particular in this area, is to give an old example from one of the most hyper-competitive closed software companies in the world, Oracle. So Larry Ellison has no love lost for his competitors and decided that they wanted to have their own version of Linux. And this is the largest software company in the world. The way they created this Linux distribution, this Linux operating system, is they took Red Hat Enterprise Linux, which is all open source, cut the word Red Hat, pasted the word Oracle, and recompiled. And so they just got to market immediately, and they added value where they could, which is in support, in compatibility testing for their own products, and they focused just on that value. That's what I would recommend this sector also do.
So let's build on that. What does open source infrastructure mean for digital assets, and then more broadly, future of money?
I mean, open source is, whether it's distributed ledger technology like Hyperledger projects, Besu, Fabric, which are being used already in proof of concepts in Norway and India and for other CBDC efforts. So you kind of have to, you can't be turtles all the way down, right? You kind of have to build your way up. On the retail side, we have an open wallet initiative, which is a reference architecture for something Dave described earlier today, which is that wallet that brings together, your identity, currency, your objects. There are open source identity systems. These, again, the digital artifacts. So all of this is where the innovation happens organically and hyper efficiently. I think in a regulatory framework, one of the things that's important is also place regulatory burden on those who can shoulder it the most. It's important to understand how tech flows. Developers create under a free and open license the code, the artifacts that are used to run all this stuff. Downstream, a government, a service provider, they offer a commercial service to customers, they indemnify their customers, and they're the ones on the, nobody calls me for support, they call these folks for support. It's very important to understand how that works so you're not throwing the baby out with the bathwater on the innovation front.
So speaking of support, Denelle, how does open source infrastructure interplay with what Stellar is doing day to day?
Stellar is an open source decentralized blockchain network. Not only is the network itself open source, but any kinds of tools that are leveraged that certainly are built within our community and our ecosystem, we're also open source. We just recently built an open source tool, and it was open source 2 months ago, that is about bulk uploading of bulk payments, so that you can upload thousands of payments at one time, and then you can have that be interplay with a wallet that's Stellar enabled, and then you can actually make payments at scale. And the UNHCR, the United Nations High Commission on Refugees, is actually leveraging this tool right now in aid distribution in Ukraine. So over the Stellar network, using a digital asset that's built on top of Stellar, so built on open source code, and then distributed into Ukraine, and then the users who receive the aid within 3 seconds, they literally can download the wallet, they get a text message, download the wallet, receive it within 3 minutes. They can have that whole process done. You can then cash out at one of the most traditional financial infrastructure companies in the world. It's a 100-year-old MoneyGram. So the thing that's beautiful about this is you can see how this open source code that is just this network that's out there for anyone to build on and to make better. I'm a big, big believer in open source and the usefulness of it. Can interplay very nicely and interoperate with the most traditional financial infrastructure. And so it's actually being leveraged every day. And the beautiful thing is, like, one of the misconceptions about open source code is that you can't make money from it. Firefox, I was the COO of Mozilla for many years. Firefox is a browser that is built on open source code and contributes to the open source code base all the time, and it is able to make money, and many are able to leverage that to be also to generate revenue. Open source code is out there and available all the time, and is only made better because we have communities like the Stellar community who build on top of it.
So let's just dive deeper for a moment into Ukraine, because Stellar's played a pivotal role in Ukraine, and I think it'd be really helpful to share with us some of the lessons you've learned, what have been some of the takeaways given a conflict zone where digital assets are playing a very big role.
I think it's really important, and this is one of the, and maybe some in the space would disagree with me, but I look at this kinds of technology as just another rail. And so it should be leveraged by aid organizations in the locations that make the most sense for it. And in this scenario, why Ukraine is a perfect location for it is even prior to the war, we were working with President Zelensky and his administration because they wanted to move to a cashless society. They were actually contemplating, we were working on a pilot with them on a CBDC. They've since transformed that into digitizing deposits and bank deposits, and so they're moving to what's called the TPN, a transparent network, privacy network. But from that standpoint, and there's also a lot of folks there who have smartphones. You can actually use the same technology on a feature phone, but who have smartphones and are comfortable leveraging that. So it was the perfect situation for this kind of technology to be used there by the UNHCR. We were able to start working with the UNHCR in February, right after the conflict started, the war started there, and we actually launched by December, so less than a year. They were able to launch this product into market. The learnings that we had is it's really important, particularly from the UNHCR side, that this not be about crypto. And the truth is, this is not about crypto. This is about blockchain technology and the usefulness of the tech stack itself. And so the wallet that they leverage for this particular, for aid distribution, is a wallet that you can send and receive assets. This is a stable coin. It's using Circle's USDC asset. So you can receive that asset, and then you can send it to the MoneyGram locations, or you can send it to your bank account once you've received it. But it was really important to them that you don't have it then be this space where you go off and buy a bunch of crypto. So we closed down parts of the wallet to make it so that you can only do the send and receive functionality, and that was a really important piece for them. I think that what I loved about this is that not only was the UNHCR able to work so quickly to make this happen on their end, it's using those open source tools that was able to help, that not only were we working with them to make it better, but there were thousands of people contributing to make sure that the code base was secure. And so this is what the beautiful thing about all of this coming together. In the UNHCR situation, it's again coming up on a year, thousands and thousands of recipients they receive on a weekly basis. It's not my story to tell the numbers that they've sent, but it's significant, and they're now expanding into other regions as a result.
So speaking of the innovation, coming out of Ukraine, Richard, what we've witnessed recently is an important executive order in Washington on artificial intelligence. And prior to that, you had an executive order on digital assets. And in both of those executive orders, you had a term that I think we've all circled, responsible innovation. And so as you're looking at, first the digital asset executive order and the artificial intelligence executive order, how are you defining responsible innovation, and what does that mean for you and PayPal moving forward?
Wow, another great question. I think, look, for us, responsible innovation is about how we meet user needs whilst making sure we're protecting the financial system. Simple as that. And I think we've always tried to think about how we're offering more choice and building new services in partnership with others and staying true to that mantra. I think responsible innovation is a responsibility of the whole ecosystem, industry together with regulators and governments and everyone else. And I think within that, you're looking for terms of like accountability, transparency to stick out. And we see that a lot, especially in the recent EO on AI, right? You're looking at how do you identify areas of risk? How do you measure that? How do you quantify? And what do you do about it? And I think that EO in particular was incredibly extensive, well documented, literally. And I think gives a lot of onus on different parts of government to come together and think about what are the goals that we're trying to achieve, whilst mitigating some of that risk. And I think that is an incredibly important thing to look at. I think from our perspective, again, I think it was mentioned earlier about it, that we launched a stable coin earlier this year, and if I think about how we approach discussions with the entity overseeing that product, which is the New York Department of Financial Services, again, you think about the discussions and how extensive they need to be at pinpointing areas that everyone needs to think about, and how extensive and deep those conversations need to go for you to feel comfortable launching, so that we are embracing a flight to quality, a flight to safety.
Yeah.
And I think that is at the heart of what I think of as responsible innovation. And I think, you mentioned the EOs here, and then I look at sort of how that's also done in the European Union with some of its framework legislation on. You mentioned AI. That's an interesting concept there of how they take this concept of risk and say, let's look at different categories of risk and address those accordingly. And in all of these systems, all of these regulatory frameworks, the proof as to whether they are going to work and embrace responsible innovation is whether we can all work appropriately together and not get too conservative without, of course, failing to address risk.
And Harish, I mean, bringing up risk, it seems like we're about to enter the next iteration of finance, of the new risk assessment, and how generative AI can be used and deployed for that risk assessment. When you hear about responsible innovation, what does that mean for the World Bank? What does that mean for folks globally when they're looking at responsible innovation in practice and in implementation?
No, responsible innovation is a very elegant term. We also used it when we were looking at how to frame our thinking around fintech. In 2018, 2019, along with IMF, we created this Bali FinTech agenda, and we use the phrase responsible innovation there. And the way we are looking at it is that it is about fostering the development of innovative technologies, also responsibly harnessing them, and then being clear-eyed about the risks, both the current and the future risks. So I think the future risk also is a point I think which we need to be very careful about. And I think the way it is kind of translating now is kind of, at the one hand, you need to look at the same economic function, same regulatory, same regulations, or some would say maybe not same regulations, but more same regulatory outcomes, right? So I think that is one overarching principle, and the way that is being interpreted is to see how the existing standards, how they can be adapted to these new technologies. And I think some things are becoming clearer. One is I think that there's very clearly, in particular for systemically important services and systems, there's a clear need for a regulatory anchor. What that means, I think we have to see, but it clearly needs a regulatory anchor. So this thing about there being nobody behind it, I think that will simply not fly with the regulatory standards. And then also policy objectives like stability, integrity, consumer protection, data protection, privacy, to name a few. I think all of that remains central, and we have to see how to adjust that. And one has to look at the outcomes rather than going by the letter. So I think there's a fair amount of creativity required. And what this means could vary from country to country.
So Denelle, building on responsible innovation, we're here talking about speed. Mm-hmm. And when we think about how can you create mutually agreed upon regulatory standards where speed is at the heart of where we are moving forward, what do you see as realistic in the short and medium term?
I think it's really important that we think about principles-based legislation versus actually, and certainly not focusing on the tech stack. I think it's mostly the outcomes. I love focusing on outcomes. And so the regulatory speed is, what are the outcomes that you want to deter? And then you think about the products. So do the same thing in AI. Like, so much is like, let's focus on like making sure this technology doesn't get out of control. But again, that's the tech stack. Focus on the products and like what outcomes you're trying to guard against. And if you do that, then you're going to be ahead of the tech as it grows. If you try to focus on, well, this is a problem with this tech stack here because, you know, like in DeFi, for example, there's so much focus on DeFi. Decentralized finance still has so much like growth. There's so much opportunity to see what happens. But if you focus on outcomes and challenges that you see for consumers or for businesses, SMEs, or you know any players that participate, then you can get to the heart of it. And I think that's one of the pieces that way back when I was advocating just for the open web at Mozilla and spending so much time in the European Union and here focusing on let's be careful about regulation, it was because we were trying to regulate pieces instead of the outcome and the challenge.
And I guess as you look at the regulatory perspective and you look globally as Stellar does, what's worked, what hasn't worked, and what are you hoping could work moving forward?
Yeah, I think standards, well I mean again, I think
Are there certain countries?
Yeah, I think the European Union's focused on what they've done with respect to stablecoins. They're right now in this place where they're going through, it's a larger act, but they're going through the process of sort of digesting and figuring out what it actually means in its implementation. It's the implementation phase. So it's really that they started at the very principled level, which frankly, it doesn't always happen in the European Union. Sometimes they get into the weeds and they didn't. They started up here and now they're going to the implementation phase, which is great. So I think that's worked there. I think it's also worked in other countries that we've seen, like Singapore, Hong Kong. You've seen a lot more openness to allowing the tech to grow, which, by the way, is what the US did so well with respect to the internet and allowing the internet technology to grow way back in the day. And frankly, we're dealing with the exact same kind of technology today. Open technology that can be looked at and can be viewed, and the code can be reviewed by everyone. And so I think it's really trying to restrain ourselves a bit from getting so afraid, so not letting fear lead us to like these fraudulent things, but getting to the place where we can be like, okay, here's what we want to guard against and let's start there. So I think we need to do better here.
Richard?
Yeah, I totally agree with that. I think I feel so sensitive to some of these issues around the right guardrails and the right risk mitigations. And, you know, again, speaking as a sort of humble industry representative and being respectful of a lot of the central bankers, regulators here, we do care deeply about trust in our services, not just from our customers, but by you and by other stakeholders in the ecosystem, because that's how we're going to succeed. We know that. We deeply, deeply understand that. But I think also, how do you take these guardrail issues and explore them fully, put the right things in place, whilst making sure, to your point, Denelle, not to lose sight of, at the heart of this, why are we doing this? Why does PayPal embrace a number of these services? It's because we want to make payments more efficient. It's because we want to help make them cheaper for people. We want to enable better access for small businesses to a cross-border digital economy that we know is going to benefit them, create jobs at those levels. And so it sounds very daunting, and it is, but how do we put that together without belittling aspects of risk management, which are fundamental to making it all work?
You know, Jim, I want to bring you back in regarding, you know, open source networks. When it comes to policymakers and regulators, and we're speaking about, you know, how they're looking at the regulatory framework and the future framework, what should they be keeping in mind about open source technology and digital assets that they're currently not?
Yeah, I think.
What do they need to be more aware of so that we can get it right?
Yeah, I think there are two things. One, I agree with focusing on the outcome, and the tech is a secondary. I noticed in the IMF book, the list of chapters, the tech was actually chapter 15, and then it went back to the legal and regulation when he showed the outline. I think that's appropriate. I think that there are two things. One, you want to preserve innovation, and that's something that I think is in response to what people want in terms of more efficient payments systems, you know, faster cross-border transfers, things like that. I think the one that, again, I'll come back to is overlooked is please don't keep inventing brand new software implementations. Just as you need to come to a policy consensus, it would be greatly advantageous for us to come to a technical consensus as well of an upstream set of components. There will be many of them. It's a nuanced conversation. and understand just how valuable that is to have a global labor force that generally understands this technology, can focus on local needs rather than just rebuilding everything from scratch. Have that nuanced conversation. Understand how technology innovation, again, flows from an open source contributor who contributes an improvement that his company may have found in terms of power efficiency, security, whatever, as is no warranty upstream, and that flows downstream to a service provider like PayPal or a government service provider. Place regulatory burden on those who are most equipped and able to deal with it. If you understand that flow, that nuanced regulation, I think, will be quite good. The US, I think, has done a good job in cybersecurity in this realm. I think the Biden administration has taken a very nuanced approach to this. I think the same thing should happen here.
So Harish, I mean, we're speaking about cross-border payments now. What do you see as certain considerations or examples where cross-border payments and digital assets have been successful? And then where could there be more work to be done?
Well, you're putting me in a tough spot because you're putting me with panelists who have been working on the space and who have some claims, right? So I think it's all experimental, small-scale proof of concept and pilots at this point. There have been some small-scale live programs, but these are very small. So I think a lot of times, I think some of the claims made are kind of need to be seen at scale, right? Whether it will hold up at scale and also during steady state. Because, for example, like if you say that transferring a digital asset is costless, that is, of course, ignoring the cost to on-ramp and the cost to kind of convert it back. And also that also assumes that person can conduct their whole lives using the digital assets, so which is not the reality, right? So I think, so one has to balance what you hear with the reality. But at the same time, there is a significant challenge on cross-border payments. It's a field which has not been critically looked at for a very long time, and the needs have also evolved from just remittances, which has been there for at least 3-4 decades, and that evolved as a very specific business model with the money transfer operators and so on, who build their own proprietary networks. But now there are more types of cross-border payments coming in, so gig workers coming in, small businesses, cross-border e-commerce. So the need is tremendous now. And what I think the digital asset world is showing is how a new network could be created, which could address some of the pain points, what could be some of the technological elements which could be relevant. But having said that, one also has to take into account some of the needs which need to be met by this technology, which is where I think the AML CFT point comes in, also the capital flow measures, which my colleague was mentioning earlier, also trust, privacy, all of that has to come in. And then one also needs to understand that there are long-standing barriers which will not go away just because the new technologies come in. So levels of financial inclusion in a country, the lack of identification, difficulty in opening an account, network connectivity, also access points, all of those are still need to be addressed for the countries to benefit from the digital asset world, right? So one has to look at it holistically, and there are some elements in the technology, and there are some services which I think are worth carefully considering and shaping to meet the objectives.
So Denelle, I mean, when you think about cross-border payments, what are we not aware of that we should be aware of, or what are some anecdotes that you can tell us about that would perhaps enlighten us more about the importance of this space? And then we'll go back to Harish. Denelle first.
So I think one of the most important things is if anybody ever tells you that they're sending any value for free, then they're lying to you. Because in order to make money in this space, which you have providers that are going to, for example, if you think of the on and off ramps, MoneyGram is an on and off ramp in the Stellar network. It's not MoneyGram who owns or controls the agents. The agents are mom and pop stores. They need to make money. They have their doors open and they're able to provide this service because they charge for it. So they are going to have a fee attached to that. So if anybody tells you it's free, then there's something wrong happening on the edge, or they're paying for it out of their hat at the beginning and they're going to charge you in the end. So it's really important. What the World Bank has asked is to be able to bring those fees down from 8 to 10 to 12% down to 2.5%, 3%. That is what you can do, what we see happening today on Stellar. We already see that. So the fact is, it shouldn't be free, but it also doesn't need to cost 8, 10, 12%. And I think that's the important piece of it. So when we're dealing with this and we see it happening, it is the challenges that we see out there with respect to digital assets have everything to do with on and off ramps. So the fact that we've solved this on Stellar with respect to 180 countries leveraging MoneyGram, it's solved, but not completely, because there's human intervention on the edge. So even if you walked into a MoneyGram location and you had a digital wallet that was connected to Stellar and you said, I want to cash out my USDC, the agent would be like, what are you talking about? So it's all about teaching people how to leverage this. If you walk into a MoneyGram location and you just give them the digital number, the same number that you would use as a cash transaction, they'll do it and they don't need to know. Again, this is just another rail. If we think about it any differently, then we create all these challenges and all this fear. If we think about it as any money transfer business, any individual, any company who's working in this space gets to choose what makes the most sense for them in their business on that day, in that moment, to that country, then that's the way that this should be thought of. So it's a nuanced discussion still, but it's all there. We just need to be very thoughtful about how we approach it.
The World Bank was named, so brief response.
Yes, no, thank you. No, I agree with what Denelle said, but just to add a perspective. We maintain remittances prices worldwide database, which has data going over 10 years. Every quarter we collect data. The global average has come down, but at a very slow pace. No? I think currently it stands at 6.2%, which is an average, simple average, not weighted, just simple average. But if you look at the granular information available, there are services which are at 3%, 2.5%, and so on. But the utilization of that is not, one would expect in a rational world that if something is available kind of 4 or 5 percentage points lower, one would go to that, but we are not seeing that happening. And that, I think, shows either challenges in accessing it, or maybe awareness and literacy, or that it is a very niche service. No? And I think more needs to be done on that, and I think that's where the focus is. And of course, there is potential to bring it even further down.
So, Richard, thinking about CBDC design considerations that support financial inclusion, what design elements do you think we should be speaking about? Are there any examples we can turn to right now?
I mean, I think in terms of design principles, I think, look, ease of access. I've heard a couple of the other speakers today talk about this. You know, ease of access is going to be critical, right? That's going to be critical for individuals, but it's also going to be critical for like who gets to play and help distribute those CBDCs. And I think obviously banks are going to have a critical role. I think non-banks have a critical role to play as well, and we've seen that recognized by a number of the sort of legislative underpinnings for CBDCs that are coming through. I think there are other sort of interesting design choices and follow-up discussions that are to be had around sort of identity management and how, you know, given some of the difficulties and cost in the system that are generated by some of those frictions, how we can look at some of those particular parts. I think issues around programmability are fascinating. I'm not going to say that I have a clear view on all those things. I understand some of the issues that come with that. But if we're serious about financial inclusion and financial health, I think issues around programmability can have an important role to play as well.
So lightning round, 5 minutes to go. Jim, I want to kick off with you. We're here in 2050, and we're talking about speed. What are we talking about? What challenges will we be facing then that we hopefully will have corrected now, building on a lot of what you talked about regarding open infrastructure?
2050?
2050.
Oh my God. What were you doing 20 years ago? Like, that's a tough one. I think that, again, the technical challenges will largely be overcome. Like, I think they're pretty much, in many ways, overcome even at this moment. I do think, you know, I work at a job where every day 800,000 developers, a collective $26 billion payroll, are responsible for the open source artifacts, and none of them work for me. And so there's a sense of humility around creating consensus in these communities that I suspect many of the regulatory and central banking folks here can appreciate. And I hope that in 20 years, the consensus on the needed regulatory frameworks on what citizens' needs are for accessibility, for trustworthiness, for transparency, have been concluded. I'm very, very confident that the technology consensus is much easier to achieve.
So Denelle, 2050, what will speed mean?
Speed is going to, I think we have to focus on the fact that there's going to be the ability for all humans to have access to things like bank accounts without having a bank there. And I think speed is just going to be focused on not just the tech stack, but just the ability to access those tools is going to be so much simpler. From my standpoint, that is the world. That's our mission at the Stellar Development Foundation. We're focused on creating that equitable access. We don't say financial inclusion, because financial inclusion is on the edge, and it's all of the folks that are building on this technology that are going to achieve that. But I think speed there is going to be all about allowing people to have access to these tools, and there's not going to be any bumps in the road. We live in truly a borderless world when it comes to this technology, and I think speed will mean that that will be able to be leveraged completely then.
Harish, from the World Bank's perspective, 2050, how will that be handled? What opportunities, challenges will that present?
Well, in 2050, it will be my avatar talking to your avatar or the metaverse and so on. So I think it's but I think from our objective as an institutional level, of course, we hope by that time the world is rid of extreme poverty, and we are able to live on a livable planet at that point. So that's what we look for.
Okay, and Richard?
I mean, I think all great answers. I think I would just add, look, I think we have the expectation is we'll be all digitally native at that point. And if you're looking from our perspective at payments, what does that mean? It means that people are going to expect to undertake and receive payments without a thought, and in very different ways from how we imagine today. So micropayments, payments for consumption that's done in very different ways. Hence the importance of getting the innovation right and making sure that we're looking at the key aspects of risk.
Denelle, I meant to ask you about the election in Argentina and what Stellar learned and gleaned during that time up to the days where ballots were taken. What did you learn about the dollar and re-dollarization?
Yeah, I mean, I think we have an application called Vibrant that's focused on Argentina. What you can do in the application is take your local currency and then convert it to a digital ARST, and then convert that into a USDC, so that you can actually hold US dollar assets in Argentina to hedge against inflation. And what we saw during the week leading up to the first ballots that went in is 150% increase in the use of that application, because so many people wanted access to the dollar during that time. Right before the second election, which was the final one, so they were 2 weeks apart, we saw even more users come to it. And then of course we saw the outcome of the election being that that there's a consideration of moving to the dollar. So I think that the dollarization and leveraging those digital dollars is already something that a lot of Argentinians do. And it's not just Argentina. We see the same thing happening in Colombia and in other regions in Latin America where there's a challenge with inflation.
So Richard, Jim, Denelle, Harish, thank you so much for this wonderful panel. Thank you.